We have finally had a small correction in the stock market from extremely elevated overbought levels. Is it now time to buy the dip? This is the most important question that everyone is now asking themselves. And this is what we're going to discuss in today's video. Guys, we've just had JP Morgan announcing on Friday last week that they no longer see a recession in 2023. 10 minutes later, guys, the market collapsed on Friday afternoon. What does that telling us? What is that telling us, guys? This is 2008 on repeat. It's exactly what happened in 2008, guys. We've just had all those talking heads come on financial media over the last couple of weeks telling us the same thing, telling us the stock market is going to new all-time highs. Buy. Why? So they have someone to sell their positions to, guys. This is the most important thing that you have to understand. It's happening exactly like it did in 2008, guys. In 2008, 2007, 2008, just before the financial crisis, they were doing exactly the same thing. They were having meetings with investors telling them the economy is stable, the bond market is stable, and you should just invest, buy as much as possible. So they have someone to unwind their positions to, because why? They were actually selling behind the scenes, and the ones that were not selling went bankrupt. Okay, so there's so many things that happen, guys, and we've run through last week, and if you haven't watched last week's video, guys, we had some amazing response. Thank you very much for that. Comparing 2023 with 1987, there's a lot of things that went on in 1987 that are very similar to 2023, guys. If you haven't watched last week's video, there's a link in the description below. Make sure you go and watch it, guys. Some very important things there. Now, guys, we've just had the most important quickest rate hiking cycle in history, okay, which hasn't happened before, doesn't bode in very well with the stock market. Now, we said in the previous videos that we're not going to talk so much about fundamentals, as it seemed that in 2023 fundamentals don't matter. We will go back to fundamentals in the next few videos, because some very important things that you guys have to see that are happening behind the scenes. Now, what I wanted to do, I just wanted to show you this chart that we've introduced in March to you. I've introduced this chart in March to you, and I said in March of 2008 we had Bear Stearns collapsing. Okay, they went bankrupt. The government intervened. I think it was JP Morgan that bailed them out, bought them up, bought their assets up, and we've had a massive rally, guys. We had a massive rally then, and then in September of 2008 we had Lehman Brothers collapsing, and when they collapsed, that's it. We had the financial crisis right after that, and you see the stock market took a hit. Now, guys, I can tell you, okay, there's a lot of things going on behind the scenes. It looks like there's another bank that's going to collapse soon. Not sure if it's in the UK or the US. The UK is struggling big time at the moment, so it's gonna be either UK or the US in the next couple of months at most, I would say. So watch out, guys. Okay, don't be fully invested, don't be fully long. Okay, even though the financial media is now full bullish, there's no one there bearish on the stock market. Everyone is saying the same thing: buy the dip. Why? Because it's going to new all-time highs, and that, guys, that may be the case. Okay, we may be going to all-time highs. Okay, but that's let's look at some technicals here, because I find it very interesting what happened here over the last couple of weeks, guys, and we need to see this. Okay, now we've discussed this. This is the chart here of the S&P 500, the gaps that have not been filled, and we've managed to fill in a couple of gaps last week, actually. Now we have 3 gaps to the upside, okay, and we have a lot of gaps to the downside. We may be able to close, we are very close to filling, 2 of them, quite very close here, so I can see those filling in very quickly, perhaps this week. And then those week, if there's a credit event, okay, those will be filled just like that. Guys, in 3 days last week, we managed to wipe out around 3 weeks of gains. What is that telling you? Okay, this is not stable. That's what's telling us. Okay, you can't, in 3 days you can't wipe out everything. And has anything happened last week? Not really. It was just Apple earnings, and they did beat on headline. However, when you looked at their results, their net revenue, guys, decreased year on year, and hasn't been that bad since 2006 2007. So there's a lot going on with Apple, guys, and if the biggest company in the world is not doing well, what is that telling you about the other companies and about the US and the consumer in general? Guys, before I go into more technicals, if you do enjoy today's video, please give it a like and do share it with anyone else that may also find it useful. And if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning, guys. Before we go into technicals, guys, we have economic data this week, and the most important data we have this week, guys, will be the CPI data. We had oil, guys. Oil increasing, okay, going higher over the last couple of weeks. That puts a lot of pressure on the CPI. We had a lot of analysts the last couple of months saying that the bottom in the CPI has been hit, and now we're going to see an increase in CPI, guys. If we do have a number, okay, here on the CPI higher than consensus, higher than 3.3%, that's going to be a big deal for the stock market, guys. Okay, a higher than expected CPI can crush the stock market this week. That will be on Thursday. Watch out for that. Okay, very, very important. Now, guys, let's look at the S&P 500 here, start of our technical analysis. Now, guys, something big happened last week. Not that we just dropped out of nowhere. Okay, look at that drop. Some say it's because of the downgrade of the AAA rating on the US. Now, I'm not buying that. Okay, it was just purely manipulation. Why? Everyone knew about the downgrade, guys. Everyone knew beforehand. And in this consolidation here, guys, in this consolidation, all those big analysts, big hats of JP Morgan, Morgan Stanley, and so on, all of them came on TV saying, we see no recession, we are going to buy more. Guys, this has been unbelievable. I mean, that's how they are manipulating, and they are getting us retail traders, retail investors, and pension funds and so on to buy right at the top, guys. That's exactly what they did in 2007 2008. Be very, very careful, guys. Okay, they were telling us to buy. There's no recession, this has legs, it's going to new all-time highs, and then the downgrade came out of nowhere, apparently. But it's not apparently, they knew about that. They have to know about that, guys. Okay, they are paid big bucks to know about those things. They didn't come by surprise, and because of that, they use that as an excuse. We told you to buy. However, we didn't expect that the downgrade will come of the US debt. So that's why it's not our fault. If we knew that will happen, then we would not tell you to buy. Come on, guys. Okay, we are not two. Okay, we know exactly what they're doing to us. Now, something important happened here. Okay, what's that? We finally closed below the 20-day EMA, and we retested that and acted as resistance. Now that's big, guys. That is huge. As long as we are not, price is not able to go above that, okay, and close above, then we are going to the 50-day EMA, which is right around 4,430 as we speak. This may change a little. It may go higher here by a few points. If that happens, guys, over the next couple of weeks, and maybe even this week, if the CPI data will come in higher than expected, there may be a buying opportunity, okay, short term, as we would be at that point below the lower expected move for the month, guys. Okay, however, if price goes here and then goes through it, then you expect those two to turn around, okay, and act as resistance. And if that happens, guys, then I expect us to go and clear that liquidity. This liquidity area here, guys, I'm aiming, which is around 4,330 or so. This will be something to watch over the next couple of weeks. And as we speak, guys, we've just on the smaller time frame, we are making lower lows and lower highs. We've made a lower low. As long as we don't close above these, guys, we are still bearish. If we do close above it, then watch out for a potential reversal back to this gap here. Okay, it may want to go and fill that gap, so be very careful. Okay, but as long as we don't see a new lower low, a break of structure here, we don't close above this, then we are still bearish. If we do close above it short term, okay, guys, you can be play tactically long. Okay, and again, if CPI data comes in lower than expected, we may get a rally there. Okay, so watch for that as well. Next, we have Apple. And guys, with Apple, in 3 days, we've managed to wipe out 2 months worth of gains. 2 months worth of gains, guys. This is big. Apple has closed below the 20 and below the 50-day EMA. This is huge. This is huge, guys. And we've been talking about this on this channel for a while now. Talking about the 20-day and the 50-day EMA, how it acted as strong support. Well, now as it acted as strong support, it may act as strong resistance. And guys, if Apple is not able to go above the 50-day EMA and close this gap, okay, this week, and we are going lower to at least test this trend line here, guys. Okay, test this trend line, which is around 163 or so. Okay, and we may want to fill this gap and a couple of gaps that have left open here. That's going to be big, very big. Okay, watch Apple. If Apple is unable to go above, guys, it's going to take the whole stock market with it. It's the biggest company, it's the biggest weighting on the S&P 500, guys. Don't ignore this. We've been watching this very carefully over the last couple of weeks, and it finally happened. Okay, and we did say that earnings may be a catalyst. Okay, and earnings was a catalyst. Okay, they dropped from Thursday. Okay, when we had the results, and look at it, right after the results, they opened with a massive gap there. Okay, they were unwinding their positions for sure there. Okay, in this consolidation, they knew this was coming. Next, guys, UK 100. Now UK 100 is still bullish, guys. We just had a break of structure here. Okay, we came into this daily IC here. This is still bullish for now, going to take that liquidity there. However, guys, looking at the 4-hour time frame, if we close below this level here, okay, if we close below this level, then I can see us going lower to take that liquidity there, guys. Okay, but as long as we don't close below this level here, then we are still bullish. There's plenty of liquidity resting there, so I can see that going and grabbing that liquidity. Next, we have the DAX here, and guys, the DAX, something very important happened with the DAX last week. We've managed to go back all the way back, and we are retesting the 20-week EMA again. We've done it quite a few times here over the last couple of months. Last time we tested, we had a close below. Okay, it was a fake break, and we've made a new higher high. Are we going to get the same, or we are right on it now, guys? If this fails and we close below here, okay, this week, then it opens the door to the 50-week EMA. And guys, if this fails as well, then we are looking for price to potentially, this will be the first level here, and then all the way back here to test the October lows. That's a potential, guys. Germany is not doing so well. Okay, the economy is not doing so well, and the stock market is at all-time highs. What is that telling you? Okay, something is about to burst. Okay, I don't know what, but if something bursts, if something is going to burst, then it's gonna take it down with it. Okay, every single country it will take down with it. Okay, on the daily here, guys, we've managed to clear that liquidity. Okay, then went up and cleared that liquidity, and now we are just in between. I'm looking for a firm close here, and we see where we get that. Okay, at the moment we are on the 1 hour time frame. We are consolidating here. If we manage to get a close here, okay, then come back, we may get a nice rebound to clear some liquidity from here and here, guys. Okay, watch for that. And then if we make a new lower low, I would like to see a firm close below this level here. Okay, and below the 200-day EMA. Okay, that has acted as some support here. Okay, support here as well. If we get a close below it, that will be big as well. If not, this may act as support again for higher prices. Next, guys, we get US 30. Now this is bullish. However, we finally got a sell signal from a highly elevated level here, which can be bearish. However, we just stopped right at the 20-day EMA, which can act as support, guys, to take us to new highs there. Okay, to clear that liquidity here. Okay, from the February of 2022. So watch that, guys, very important. If we manage to close below this, okay, so you go up higher and then we close below it, okay, that can be bearish. Okay, and take us to the 50-day EMA, and then if that fails as well, then I'm looking at this liquidity here, guys. This is way too clean here, and I have to take that. Okay, so I'm looking for price to come back into the 33,500 level or so. Okay, this level here. Now watch that very carefully. If we look at the 8-hour time frame, guys, okay, we finally had a break of structure. Okay, a retest, okay, into this 8-hour IC, and then we go here. Okay, so if that is the case, as long as we don't make a new high here, okay, as long as the price doesn't close above this level here, then we are bearish. If we do close above this, then I can see us going and taking that liquidity for sure. Okay, and we do have this trend line here, guys. If price goes all the way down, this trend line is something to watch for sure. Next, US 100, guys, very important here. We've managed to close. Actually, we are right here at this weekly IC here, guys, and this we've been consolidating right in this weekly IC here, which I think is very, very important. Now, from a daily perspective, again, we've managed to close the same as the S&P 500 below the 20-day EMA and tested that as resistance. Now, as long as we are not able to close above that, guys, the 50-day EMA is the next support level, and if that fails, then if we close below it, we can see those turning around and act as resistance, okay, to take us lower. The first level that I'm watching would be this 14,197 level, this level here, this liquidity resting below that. If there's a credit event, if something happens, then guys, in 3 days here, okay, we've managed to wipe in again 2-3 weeks of gains. If there's some catalyst, and I don't know what that could be, but if there's a catalyst over the next couple of weeks, we can wipe all this rally here, okay, in a week. Don't discount that, okay? Don't discount it, okay? It can happen. You saw it here. 2 weeks in 3 days. How about 3 months in a week? Certainly a possibility there. Okay, certainly a possibility there. Now look at the 2-hour time frame here. Okay, we've had, and we discussed this last week, guys, how about we had this gap here. We've had the gap. Price has come back a number of times here, but this gap has acted as strong resistance. Okay, resistance, and then we managed to make that new lower low there. We have another gap here. Okay, so watch for that. Price may come back to that, and that can act again as resistance. Okay, we have this liquidity here resting right below where price is, very clean. And I want price, if we are to go higher, I want price to firstly take that, okay, before he wants to go up higher. However, guys, if we manage to make a new higher high here, as we fail to make a lower low here, if we make a new higher high here, we may be able to get a nice rebound here, okay, into this or potentially this level here. And obviously if we break this, then new highs are on horizon. However, if we make a new lower low here, we may be able to go lower, okay, into, especially if we are unable to go back and regain the 20-day EMA. So watch for the 50 at the point, guys. Next we have the VIX. The VIX, and this is I think one of the most important charts to pay attention to. Why? Because guys, we've managed to finally close above the 15 mark. All those people that were telling us the VIX is broken, the VIX is now back alive. And look at this, we've managed to close above 15, above the 20, above the 50-day EMA, came back, tested that perfectly as support, and now looks like it's going high. Where is our next resistance, guys? This is obvious here on the chart, the 20 marker. The 20 marker had the resistance perhaps again. However, guys, if we break this, it can do exactly the same. Come back, act as support, and off we go to 25 or potentially that 35 marker, okay. The catalyst could bring us there for sure, guys. This is huge, okay. We finally managed to close 1 to 3 days above it, above 15. This is big, this is very big. As long as we manage to stay above it, okay, then we're definitely going lower in the stock market, okay, on the S&P 500. Watch that, guys, watch this very carefully. On the 1 hour chart, we've opened with a gap here. We do have a couple of gaps below. However, the 15 marker is very important, okay. If VIX crashes all the way back here, then we are back at square one and perhaps new highs for the S&P 500. However, if we're able to hold this level here, this area, then we're certainly going lower in the S&P 500. Next, guys, we have the DXY. Now the DXY has managed to fight back and create was not able, okay, looking at the 4 hour time frame we made, and we discussed this last week, guys. We've made a higher high, higher low, higher high, higher low. This is bullish, guys. The DXY is very bullish, going to take this liquidity resting above there and potentially all the way back to 103 apologies, 760 or so. This is my first level here of liquidity to be grabbed. However, guys, this looks very bullish, okay. This looks very bullish, and if we take this, we may potentially go even higher to 104,640 or so. Very bullish, guys. However, if we go and close below this, if CPI comes in lower than expected, we may go lower here, okay. We may go lower to take that liquidity there. So, okay, so two things to watch. However, that the EMAs are now turning and acting as support, and as long as they are able to hold our support, then I can see us having higher prices. Going back to the 4 hour time frame, guys, if we do close below this level here, okay, which is 101,360, then we may be going lower at that point. Until that happens, guys, we are still bullish. Next, gold. And guys, we discussed last week, I said there's nothing going on in gold, okay. It's taken that liquidity and I wasn't interested. I'm only the only time I'll be interested in this is if you close a firm close above here or a firm close below here. At the moment we are right in the middle, so we are just waiting to see what price is showing us. However, a stronger DXY will not bode in well with gold here, okay, so watch out for that. Lastly, guys, Bitcoin hasn't been doing nothing, okay, nothing over the last couple of weeks. It's literally been, it seems like there's no liquidity here, there's nothing being injected here. However, guys, I just have a feeling they may want to just have a strong move up higher, get everyone into buying again. That's it, you know, Bitcoin is back, and then they pull the trigger, go all the way down, clear the liquidity, and then the big fish are buying here, back all the way back here. They don't want to buy here, they will buy here, okay, at lower prices. So I wouldn't be surprised if that happens, guys. Okay, I wouldn't be surprised to see a fake break, then come back all the way down, flash down everyone, and then that's it. Okay, at that point everyone will be scared to buy because they'll be like, we bought here, okay, we got we got liquidated. What's the point? Okay, it's going to do exactly the same thing, and that's when you say that, it's not going to do it, so that may happen, okay, over the next couple of weeks. I have a feeling that it could. That's it from me, guys. Thank you very much for watching. Okay, a lot of content out there. Make sure you watch the video from last week. Make sure you give us a like, and if you're interested in the strategy that we use, or would like to learn more about the ultimate scalping masterclass, guys, this is big. This is following what the algos are doing in the stock market, and it's got over 90% accuracy, and everyone that's done the course already is been really happy with it, okay, making big money with it. So if you're interested, send us a message and we can certainly have a discussion about it. Thank you very much, guys, and I hope you have a great trading week there.